What's up, crew? It's Jordan here, and today we are speaking about managing fakeouts. This is one of the most important lessons that I have recorded so far, and one of the most requested. This really is essential knowledge, as if you don't understand this properly, it can cause you to get wrecked. This is how a lot of newbies lose money to the market, and one of the things that was a game changer for my trading when I finally understood it. In this video, you're going to learn how to not make the same mistakes that I did and that so many traders do and burn capital. If you are trading along with us, please be sure to use the Apex Dex link in the description, as here we get awesome fee discounts, fee rebates, and we also have a really great campaign running at the moment for deposit bonuses as well as volume milestone bonuses. This is real capital that you can use to trade and build an account. And there is no better way to trade than with absolutely no risk using free capital that is given to you by an exchange. I work hard to get these free bonuses for my community, so make sure you take advantage of them. And it's awesome to see that the crew has already claimed thousands of dollars in free capital. Be sure to join our Discord community. That link is in the description also. And this is where all of the traders in our community trade together on a daily basis and learn and earn together. We can see in the P&L share group that the crew is killing it, using our strategies and growing together. Some of the traders here are really doing amazing things with our strategies, so get involved here in the Discord. So today I'm going to teach you 3 foolproof ways to manage fakeouts properly and make sure you do not fall prey to being stop hunted by the whales during fakeout events. And these are very common. Let's start with the definition of a fakeout. What is a fakeout? A fakeout is where price moves outside of a pattern and traders think that the pattern is breaking and they enter trades in the direction of the breakout, only for the whales to flip it on them and drive it right back into the pattern, and everybody gets stopped out or liquidated. These fakeouts can happen in a variety of different patterns, from regular horizontal support and resistance, any kind of trend line or triangle pattern, parallel channels, bull flags, etc. For this tutorial, I'm going to start off with the absolute best way to make sure that you are ahead of the game and not falling prey to fakeouts. This is 100% the best way to trade, but it does take a long time to understand, so the sooner you can wrap your mind around it, the better. A breakout is technically the break of a resistance and a move away from it, or vice versa, the break of support and a move away from it. Ideally, you never want to be trading breakouts at all. And the way to do this is to trade longs from support and shorts from resistance. Of course, you do need confluence in your trading plan when trading support and resistance, and this can come from fixed range volume profile, smart money concept, or market cipher, or even a combination of all of them. Those are the main facets of my strategy, but you can use any confluence that you enjoy in your trading plan when trading support and resistance. So really, the idea here is to make sure that when you identify a pattern, and please watch the tutorials I have on all of these patterns, parallel channels, symmetrical triangles, bull flags, bear flags, etc. But the idea here is to trade longs from support with confluence from your other indicators and shorts from resistance. Longs from support, shorts from resistance. The idea here is that when you get a breakout in a certain direction, you are already in the trade in the correct direction from a much better entry point. Trading a breakout is always risky, even if you do use the methods that I'm going to show you in the rest of this video. And really, the best way to do this is through a hedge trading strategy, and there is a video on this in my crypto trading tutorials playlist. So you are longing from support, you are shorting from resistance, and you are taking profits along the way on your longs and shorts and adding them back into those trades. Then when you inevitably get the breakout in one of the directions, your incorrect direction trade will be stopped out and your correct direction trade will continue into parabolic profits. I know the hedge trading is more advanced, but you do not need to hedge trade to understand the simple concept of going long at major support and going short at major resistance as long as you have confluence from your other indicators, so that when the breakout occurs, you are already in the trade from a better entry price. Extremely helpful indicators here are your fixed range volume profile, which you can use on that range to let you know when it is a good idea to go long in confluence with your support, and the same thing with shorts. There are full fixed range volume profile tutorials on the channel, so make sure you have watched them. Another one is of course your RSI and your stochastic RSI. There are also tutorials on that, so make sure you catch up on them. And of course, the best indicator of all time, market cipher. There's a full playlist on this on my channel, and it's very important. This can take you from being an intermediate trader to a pro trader. Let's look at another quick example of trading from support and resistance instead of trading breakouts on the pattern of a parallel channel. There are also tutorials on how to draw these in on the channel. And the best way to trade these is, of course, your shorts at resistance and your longs at support when you get the right signals. Then you will already be in the correct direction at the breakout from a much better entry price. Okay, so now let's move on to the next best way to manage fakeouts. And this is to trade retests. This means that you do not flip your directional bias until price actually breaks out and returns to retest that support and resistance and flips it. We can see how traders who went long thinking this was a breakout got absolutely wrecked, and the same thing here. Of course, our indicators were telling us to go short, and this is an unfortunate way that a lot of newbies get wrecked. What we can see here is a very clear example of a nice retest. Of course, as I said, the better way to trade this is to be in the short from resistance, but we can't always be perfect and get that trade. If you did really want to get in on the breakdown from this channel, then you would be looking at the flip of this support into resistance. And this is the second best way to manage fakeouts. Here we can see where price broke down below the support of the parallel channel, and this is not where we go short. And we saw price coming back up to flip this support into resistance. And this is where we start getting hungry for the short trade. We can see in this instance, we had a double retest confirming the support of the channel flipping into resistance. Along with this, of course, very nice signals on our indicators on the lower time frames. And this resulted in a very nice trade. Here is a very nice example of a retest scenario using a simple horizontal support and resistance flip. You can use the high volume nodes on your fixed range volume profile to identify these very significant horizontal support and resistance lines, as well as using visual pattern recognition to understand where these support and resistances flip. Here we can see strong resistance on the chart, and here we do see a breakout. The ideal way to trade this would not be at this breakout, but to wait for price to return to the resistance level and flip it into support. That is the safer entry for the trade. And of course, as always, use your other indicators for confluence, such as these bullish divergences on your RSI. Okay, now let's speak about the third way. And this is really for the more rodeo traders with a higher risk appetite, or the scalpers. But really try to use number 1 or 2 before you resort to this. Some traders with a higher risk appetite won't want to get left behind when waiting for a retest, and they may have missed the opportunity to enter in at the support. So for conservative traders, best way is to enter at support or the retest. But for the higher risk appetite traders such as the scalpers, the idea here is to wait for multiple candle closes above the trend line break. And the logic around doing this is that you will not always receive a retest. Being a conservative trader myself, I would rather take less trades and have a higher win rate. But for traders with a higher risk appetite, and for those who prefer higher frequency trading, there is logic behind waiting for multiple candle closes, which means 2 to 3 candles closing above the breakout level. This can be a confirmation of trend continuing above that breakout level. Remember, the rule of thumb here is 2 to 3 candles closing on your given time frame. And price action candle reading really does come in handy here to understand a bullish candle pattern, which can then give you a continuation in the trend. But this is advanced And these traders do need exceptional risk management strategies such as utilizing trailing stops. Another helpful indicator here is simply to look for increasing volume on the multiple candle closes. But really the best indicator for me is the money flow within the market cipher B indicator. This can really help you to understand when money is coming in and when you can hop onto a trend continuation. So to recap here, I cannot stress enough, you do not enter a trade at a breakout. The number one best way to manage this is to go long from support and short from resistance within patterns, and using your other indicators for confluence. Long from support, short from resistance until you get the breakout. This gives you beautiful trades and better entries when price does break out of a pattern. Number two for conservative traders is to wait for proper retests before entering into the support and resistance flip. And number three for the rodeo traders and scalpers is to wait for multiple candle closes, increasing volume, and money flow coming in or out for the short breakdowns. I hope this has been useful. Please let me know any questions in the comments that you would like for follow-up videos. And please remember, always play from a position of power and strength.